Welcome to episode 37 of Accessible Finance, where we demystify personal financial topics and answer your questions so you leave saying, I get it now. I'm Eric Johns.
And I'm Rachel John.
Let's dive in.
All right, Eric. So clients have filed taxes. We've discussed what kinds of expenses they were able to use and moving forward, what kinds of expenses they should be tracking. So what rules of thumb should people follow with regards to that? Like we had people that kept every receipt that they ever had for anything ever,
Right.
which is really tedious and not necessary.
hmm
And then we had clients having to go back and retroactively try to dig for expenses that would have been really easy to track throughout the year. So
Sure.
thoughts?
No, I think this is great. So
Yeah.
the question we're trying to answer, like the takeaway we're hoping you guys leave with is, what exactly should I be handing to my accountant at the end
Right.
of the year? And what should I even worry about tracking, right?
hmm
So for most people that are kind of in our cohort, right, in our age group, they're going to have kids in school. The first thing you're thinking is and dependent care credit. Okay. So most people are going to qualify for this if you have two working spouses.
hmm
Okay. So both spouses need to have earned income. All right. And then you need a qualifying child, which is going to be a child under the age of 13.
hmm
So 12 or under. And typically the kinds of expenses that we're talking about here are before and after care, preschool education, which is below kindergarten. Kindergarten does not count for the purposes of the child and dependent care credit, right? Then
Right.
transportation costs to and from the place of care. And then if you have like any disabled persons, they're actually able to be claimed even if they're above the age of 13 or above the age of 12.
hmm
So they can be claimed forever. They're always going to qualify for this credit. And then home care, this is kind of interesting. So if you pay even a family member or a nanny or a home care aide, anybody that's going to take care
hmm
of your dependents, really your children in this case mostly,
Right.
so that you can work again, children 12 or under, so that you can both you and your spouse can work. You can count that counts, right? And the credit itself is going to be it scales, right? So, but starting at $43,000 of AGI, you're going to get 20% of the amount that you save. So if you have one dependent,
Right.
you can have $3,000, right? So you can get $600 if you have the full $3,000 of just expenses to claim, you can generate a $600 non-refundable credit. Does that
Yeah.
make sense? So 20% of the
The three.
$3,000.
Yeah. Okay.
All right. And then if I have two or more,
Right.
the maximum is $6,000.
So, like in our scenario, we've got three kids,
Yep.
but if we just had the two, we would be claiming the same thing.
Correct,
Yeah.
assuming that you can fill up the $6,000, right?
Sure. Sure.
So
Sure. Sure.
one of the takeaways immediately is if I've got $6,000 of expenses, I can stop counting. That's it. Nobody cares after that,
Right.
right? The Fed doesn't
It
give you
doesn't
you
matter
don't
if
get
I
any more
have
credit. You're
50,000 of
right. There's no
expenses.
real
Yeah.
need for you to go justify, $20,000 of expenses and you start keeping receipts and
Because
everything
it's kept
else.
there anyway.
Exactly.
Okay. Questions. First
You
thing
got them? Let's go.
I do.
All right.
All right. Louisiana versus feds. Um, do both need those expenses tracked?
They are different. I was going to go the Fed first and
Well,
then
no, I know,
Louisiana.
I know. I just want
Come
to make
on,
sure
man.
that because you didn't explicitly state
I didn't.
we're living in a 1040 world
I
right
didn't.
now.
That's
Okay, so
correct. So this is on the 1040,
we're
correct? This
focusing
is
on
on your
feds.
federal return.
Okay. Second thing, what about like summer camp?
Summer camp counts, but not overnight camps. Does that make sense? Why do
Interesting.
they make that distinction? I don't know, but I had to remember for the test I just took.
Wait, okay, so if I send my kids to a summer, like an overnight camp for 2 months, I can't count any portion of that?
Correct. So this is the way they say it.
Interesting.
Non-qualifying expenses. The cost of sending a child to an overnight camp, but day camps generally do qualify.
Okay.
Presumably because some of the cost of the overnight is time where you would not be working. You're not going to be
No,
meeting.
correct.
You're
But
not
they don't even try to like give you a like
prorated version. No, I think
yeah.
they probably were just like, this is too much trouble.
Okay.
But I don't know.
Interesting.
I mean, I'm speculative. I'm
I feel like you could
speculating on
try to
why the
okay.
IRS is doing the
Yeah.
thing. They don't want to give you credit if they can help it,
No,
right?
of
Like they don't
course,
like
of
to
course.
collect the
Okay.
taxes. But
So
just fundamentally, what they're trying to do, if you're like, why is this credit here? It's supposed to incentivize
working.
parents to work.
Right.
So it's supposed to be you're getting your child taken care of so that you could go to work.
Right.
But for the care of your child, you wouldn't be able to work, kind of thing,
Correct.
right?
Correct. Correct. Okay, so last thing. Imagine a scenario or hypothetical where a like parent was a stay-at-home parent. After the summer, like let's say starting in August, they transition into the workforce. Maybe they go into education or whatever it is.
Okay.
Um, at that point when they've re-entered, can they begin tracking expenses for the child? Like, does the expense for the child have to happen at the same time as the working, or do they just have to have earned income within the year?
It's a fantastic question that you can pitch to your EA or CPA, your tax preparer of
Okay.
choice. Um, the the way the IRS wants you to handle it is they're supposed to be matched into the
Yes.
same month,
Sure.
right? And it's supposed to be earned income to the month.
Sure.
Could you get away with a
I was gonna say,
January versus
on the form, like on the
perhaps?
1040 itself, it does not have you, to my knowledge, specify when the
Nope.
expenses took place. So theoretically, if they are in aftercare or something like that during the months that you're not working, you transition into the workforce in August, you are now a teacher. They go to the same school that you're at. You then take them home. They no longer have to be in aftercare at that
Hmm.
point. You could theoretically put the amount that's there. However, if someone comes knocking at your door and says, like, hey, did you,
Right.
what was this to help you work?
You're supposed to do them. You're supposed to be matching the expenses. Likely, though, if you have earned income for both individuals for the year, and then you have the qualifying childcare expenses,
It probably doesn't flag anything.
likely you're okay. Likely. Talk to your CPA and EA, ask them what they're comfortable with,
Yeah,
and let them advise you on exactly what to do. This is not tax advice. Right?
that's right. That's right. Okay. Um, sorry, continue. So we're still living in our 1040 world.
We're in the 1040 world. Yeah, the couple points that I wanted to make, right? We said 20%. It scales up to as much as 35%. You can get credit for 35%
Wait, can we discuss how you just said 35?
very awkwardly,
Yeah.
super awkwardly. I
Okay.
agree.
Just making sure.
I mean, I'm glad you
Okay.
pointed it out, honestly. You need to deter that kind of
I
behavior.
got you.
All right.
So 20 is the floor, is what you're saying?
20 is the ceiling. Well,
You said it scales up to 35.
correct. Yeah, but you're still the maximum amount of the credit is still going to be 3K. I mean, I'm sorry, it's still going to be
600.
yes for the one child. Or
Got
if
it.
you have 2 or more, you're at the 6,000. Well, actually, I guess you could actually scale up, but the the income brackets are so low that most
Right.
people that at least the
Realistically,
people that we're gonna be interacting with and talking to for the most part are not gonna
for
be there.
people looking for to work with a financial
Correct.
professional.
It's $43,000 again. So if you're on a married filing jointly return and you're making, $100,000 combined even, you're gonna be at 20%. So we're calling it 20%, but just know that it does get higher if you're in the lower income brackets, right?
Mhm.
It's 35 if you make under $15,000 a year.
Right.
So anyway.
Okay, perfect.
That's the point that's the only other point that I was gonna make there. But basically, if it's an expense, again, can't be kindergarten, all right?
Mhm.
If it's an expense that you're gonna incur so that your kids can be watched while you work, generally it's gonna qualify. So track things like before and after care expenses. And really, when I say track things, what does that mean? It can really just be your credit card statements for
Yeah,
that with like things highlighted, right? Typically
right.
that's fine. If you just want to aggregate it in a spreadsheet, right? If you want to
That's what I did. That's what I
Right.
do.
Yeah, if you have a spreadsheet that just has like, tuition or childcare expenses or something like that, and then it's got an aggregation there,
Mhm.
then you're good to go. So then the other thing for Louisiana residents, right? Let's move on to the IT 540, right? So that's the Louisiana tax return.
Mhm.
And they have a um, Louisiana school expense deduction worksheet. Okay, so there's three things
And this is separate and apart from the
separate and
dependent
apart.
care.
Correct. Yes,
Right.
this is
Not to
completely
allow you to
separate.
go to work, but just a,
Just we're going to
yay,
give you
you're in
credit
this
for being
school.
in Louisiana and doing these things.
Good.
Okay.
Being a productive citizen.
Right. So they will let you pay for elementary and secondary school tuition. They will let you deduct um, some portion equal to the amount of tuition and fees paid per dependent, limited to $5,000. So that's if you're in private school,
So
but the
this
private
is
school has to
not
qualify.
capped though at 2 dependents. Is that correct?
No,
You said per dependent.
correct.
So if
My
I've
understanding is
got
no.
5 kids,
So just to be clear, we're not trying to get granularly involved in like this is what you should do when you prepare your own tax returns or go tell your tax preparer these things. This is
correct.
more just a hey guys, have some idea of what we should be you should be tracking to make your tax season a little bit easier on yourself.
Correct. Because
Okay?
like we said earlier, like we legitimately have had people with boxes and boxes of
Right.
receipts
We're
trying to
trying
dig
to
through
save you
receipts.
some time.
There's no need for that. And then we've also had people who track nothing and then have to go and retroactively do it. So
Right.
if you know what things you're tracking, It's a lot easier in
To be
terms
clear,
of
retroactively doing it shouldn't be prohibitively difficult,
not
right?
with the
If you're
current
paying through, like, credit cards, you're
correct
probably good.
digital stuff.
If you're paying if you're paying, with cash or checks, it's gonna be
It's a
marginally
little
more
more yeah,
difficult.
yeah,
I
yeah.
would I would not advocate that, but if you have to, then you have to.
But you're more likely to do that if you're utilizing like family member or some kind of like not institutional care,
Correct,
but some kind of,
correct.
so just tracking that, I think on the front end is
Right,
the
so,
easiest thing.
if you're sending your kid to private school and you're in the area, a lot of people do,
Yeah.
right? So, you can deduct up to 5,000. Again, this is kindergarten, this is K through 12. There's also separately this sorry, this has to be used separately from K through 12 start expenses. So Louisiana has like a 529 program, right?
Hmm.
Which is called like Start, LA Start. And then they have a Start K through 12 version. And we should write that on the podcast
I'm
topics that
doing
we're gonna
it.
do. Yeah, we'll do a whole podcast on what exactly the differences are, how you should utilize that, and how you should be thinking about that. Just know that you can't take the deduction for the same dollars on elementary and secondary school for the 5,000 per child, plus pay it from the K through 12. So if I have a 529 K through 12 and my tuition is $6,000 and all $6,000 comes from my 529 K through
I
12 version,
can't then also claim it
right?
as
I can't
expenses.
take this deduction plus paying from the K through 12.
So
It
the
should have
deduction
been
has to come from like your bank account and not from special
right.
funds that were saved through the state that you essentially you've already received the benefit on the
Mhm.
529 if you're using the K-12 529 start.
Right. So there's a little bit of tax planning involved there if you
Yeah.
if you think about it, right? You can take the $5,000. So let's assume, like I just said, that I have a child that has $6,000 private tuition, okay? And they're in a qualified institution. I I take the $5,000 deduction and then I pay $1,000 from the 529 K through 12 and I'm
Right.
good to go. I can take the whole deduction, right? So as
Correct.
long as I
Because
can
it's capped at 5.
correct.
Yeah.
Yep.
So you could just
So if
use
it's
the
10, you could use, 5 and 5, right? And you're still
correct.
good to go.
And just for those who are listening, being like, what are y'all talking about? We've talked a
We'll
lot
go
about
into the
the
529s.
collegiate 529, correct. There is one that we'll talk about in a later podcast that is specially reserved for K-12. So if you like, you basically can't double dip.
Right.
So
Right.
yeah.
A lot of the 529s for federal tax benefits, so the AOTC, American Opportunity Tax Credit, and
Mhm.
the Lifetime Learning Credit are both college credits that you can get for attending college in the United States.
Yeah.
So, well, actually, you don't have to attend the college in the United States, but you get the credit for being a U.S. citizen that's filing while you're attending college and
Correct.
wherever. Anyway, the point
It
is
works for
that those things are also mutually exclusive. You can't use a 529 and claim the AOTC on the same dollars
correct,
or the
correct.
or the
So
lifetime learning
so
credit.
there is planning as far as like
So typically, if you're
where
going
do
to
I
use
want
a
my
creditor
specific dollars
deduction,
to be coming from? Right.
right, you can't use it from tax advantaged accounts typically. So anyway, elementary and secondary school tuition in Louisiana, right? That's one thing. So just track your
Mhm.
tuition receipts, which you're probably doing anyway.
Right.
Then there's educational expenses for homeschool children. All right. So if you're homeschooling your kids,
Mhm.
you can also track
There's been an
those.
uptick in that lately too.
Yeah. Right. So then this is one that, our kids it would matter to us and, families that have their kids in the like, advanced study academies or magnet schools or whatever.
Or
Um,
any of the public school.
any public school,
Right.
correct. Any public school, there's called educational expenses for a quality public education.
Mhm.
What does that mean? Right? Those are school uniforms.
Yep.
It's supposed to be mandated by the school. It has to be required by the school. So it can't just be like I bought my kid new shoes to like exercise
Correct.
with.
Correct.
That's not supposed to be on there.
Right.
Okay. Um, so yeah, school uniforms. So when you buy your uniforms, make sure you're keeping those receipts.
Yes.
Textbooks or other instructional materials, and then supplies.
Correct. So, like in the beginning of the year for us, we've got the supply kit vendor that comes out. You can either go buy them on your
Mhm.
own, or they're like, "Hey, buy this kit; it has everything."
Right.
There's usually a technology fee and enrollment fees that are there, which would count.
Correct.
Um, we'll buy the uniforms even at the used uniform sale. Like we're still
Oh yeah.
buying the
Count
uniform stuff. Exactly.
count still uniforms required by the school.
Correct.
So right. So you can get you and that deduction is going to be 50% of the deduction usually
Mhm.
or of the dollars spent.
Correct. And it is important to note that if you have multiple kids, it is delineated by child on the
Correct.
return.
Yep.
So, ours are so close in age that typically when we go and get stuff, we get it for all three. So I'll usually just kind of split it like into thirds. But if your kids are further apart in age or have varying expenses and you want to categorize it that way, that's fine. But just know that you are going to have to report it by child.
Right.
Mhm.
Questions?
Not thus far. I'm
Really?
good. I'm good right now.
All right.
I'm
Well,
good
we're
right now.
we're in great shape then. That's
Yeah.
fantastic.
Yeah. Yeah. So okay, so well that goes into the types of things that you would want to keep track of if you are a parent or have kids or someone with dependent care stuff. What other types of um expenses throughout the year might somebody want to keep track of?
Ooh, it's a good question. Almost everybody's going to itemize these days, so mortgage payments and mortgage interest are not going to be particularly useful or helpful.
Correct.
Charitable deductions are also not going to be useful or helpful unless you're itemizing. If you're itemizing, everything changes, right? So if you're a high earner and you have a significant amount of charitable gifts, for example, that's one thing that could get you
Yeah.
there. State and local taxes plus high mortgage
What
might get you
about
there.
student loan?
Student loans will work. Yep,
Hmm.
interest on student loans will work.
Student loans. Any other above the line things that you're thinking they might want
Contributions to
to?
your IRAs.
Hmm.
That's one. Yeah, you're definitely gonna want that. So you're gonna wanna know you always wanna know your basis in your retirement accounts. And this is something that if you listen to the show regularly, you're probably still confused on this because many planners are as well.
Yeah.
You're not alone. Um, so the basis in retirement accounts is a big deal. And what that means is you're likely to want, it's desirable for individuals to contribute to a retirement account in addition to their active retirement plan. So they're gonna have
Correct.
you're likely to have an employer-sponsored plan at your work. Call it a
Mhm.
401k, 403b, 457b,
Yeah.
whatever, one of those, okay? Even a simple IRA or a SEP. There are a lot, but
Yeah.
they're
Yeah.
having to
Yeah.
do directly with your employer. You likely talk to your HR about those plans,
Correct.
okay? You, you also are gonna want to make a contribution you're likely to want to make a contribution to either an individual IRA or traditional IRA
Yeah.
or a Roth IRA on your own.
Well, we did a podcast about this previously where we
Yeah.
discussed the fact that there are more limitations on the workplace retirement plans,
Mhm.
but that the majority of the workplace retirement plans will offer some type of matching.
Right.
So
You're
the
gonna wanna be
advocacy
there
is
for sure and take it.
correct. But even if I contribute up to the match and then I have my match, let's say in an ideal world I end up with I contribute 5, they match 4, I'm now at 9%. When you work out the math, 9% is still not really high enough to get me where I need to be. So oftentimes when people are contributing enough up to the match, they feel like a girl, a boy,
Right.
which is an amazing thing. But oftentimes if you're looking into projections towards the future, it's not enough. And
And one of
so
my
you
favorite
are going to
drums to beat,
contribute. Yeah.
even if it is enough, still useful most of the time, or
Yeah.
well, almost all of the time, to contribute to a Roth, right?
Yes.
Because I can withdraw my contributions again whenever I want.
Right.
We're not gonna make it through any episodes
Without saying
without talking about a Roth, and that's fantastic.
yeah,
I can't
that's
tell
so
you how
funny.
much that excites me.
I will say we're at the point now where our children at the dinner
Well, they
table
know.
will ask repeatedly
They're sweet little
about
people.
Roth contributions. Yeah.
Right, but the
Um,
idea is you can if I could put my money in a brokerage account or a Roth IRA, I should almost always choose a Roth IRA
mhm,
unless I desperately need the earnings on that money.
mhm.
Basically, you can pull the money out of the Roth IRA that you put in, interest and tax and penalty free,
Mhm.
and then the earnings that you had on that money will sit there, and they can keep generating earnings tax free
Yes.
forever,
And
as
slice.
opposed to a brokerage where
Yes.
you pay taxes every year.
Slight segue in that as well. I think oftentimes there's a um misunderstanding that contributing to a Roth is an investment in and of itself.
Oh, correct.
Whereas putting it into the Roth IRA versus a brokerage, the only difference there really is the tax treatment. But as far as what you're investing in, you have a variety of options.
Exactly, very much the same
So,
things in many
correct.
cases. Yeah, we get that a
Yeah.
lot. Like, and it doesn't mean that people are uneducated or
No,
foolish or whatever. It's just
I
not
even
something
took a
that people would
class
know.
about Roth
It's
IRAs.
not
I
something
didn't
people would
learn
know.
about it at any point.
Right, and
At
then
any
people
point.
will tell you about their Roth balance, like, "Oh, do you have a Roth?" And they'll be like, "Yes, I have $10,000 in my Roth."
Yes,
They're not like, "I have $10,000 in my Roth and 100% of that $10,000 is in VTI," right?
exactly.
They're
They
not
don't really
going that
necessarily,
granular.
and most people don't necessarily know where it's invested. And it's not to say that you need to know where it's invested at all points. You just want to make sure that somebody, whether it's you or somebody that you trust
Somebody
that
needs
you're
to be paying
working with,
attention, yeah.
correct, is just checking it out every now
Right.
and then.
So recap,
Yeah,
okay? We're keeping track of all of our child and kid dependent care expenses,
correct.
which are gonna be under pre-K, so before and after care, right? and preschool,
Correct.
so that it's enabling both spouses to
To
work,
work.
which means both spouses need earned income. Okay. Summer camps will count as long as they're not overnight.
Correct.
And then when we're going to the Louisiana return, we're keeping track of our tuition and fees,
Mhm.
okay, school uniforms,
Yep.
textbooks or other instructional materials, and then supplies.
Mhm.
Okay.
And that's not to say that other states besides Louisiana don't have something similar. So if you're in another
Oh, sure.
state, certainly look into what,
Right.
state offerings are with regards to
Right. Our goal
education.
is again just to make your life a little easier. So if you're going to, Costco or Walmart, if you're
Mm.
us,
Correct.
then when you're going there, it's going to be kind of tedious to, oh wait, what did we spend at Walmart back in April or back in
Yeah.
August when we were getting supplies? Like you don't want to have to go
Honestly,
dig for it.
and I honestly think probably one of the hardest places to try and parse things out like that on is Amazon.
Oh
It's
yeah.
really challenging. My recommendation for stuff like that is if you're going to make a larger Amazon purchase, just make two smaller ones so that you have one that's personal versus one that's like for kids' supplies. So you're not having to go back through the Amazon stuff and look. But yeah, I think we could also do an entire other episode with what kinds of things you want to keep track of financially if you own your own
Self-employed.
business.
Ooh,
Yeah,
let's go.
that's a whole other thing.
Let's go.
So if you do fall into that category, please by no means take this as, oh, I
This
don't
is
have
all
to
I
track
need.
anything.
Right,
Right,
right.
right.
Oh,
This
we'll
is
get
more
there.
personal. Yeah,
Business miles, meals, there's all kinds
correct.
of things.
Correct.
Home office. Anyway, but yeah, guys, thanks for listening. So if you enjoyed today's episode, please review the show. And if you have any topics you'd like discussed or financial problems you'd like solved, reach out to us at podcast@equilibriumfp.com or visit our website at equilibriumfp.com.
Till next time.
Thanks, guys.